It is. It's just like another nickname for Jesus.
Got it. Got it. Because I grew up, mostly predominantly Hispanic communities, and for Jose, a lot of times they would say Pepe.
No, yeah,
Or,
I heard that too.
so, dude, leave it to the Mexican culture, man, to start butchering things, guys.
I know they have so many different names for like everyone.
So my last name's Tijerina, and they started calling me TJ when I was in the seventh grade because everybody was just like they couldn't say my last name for whatever reasons. Growing up with predominantly Hispanic kids, little Mexican Latino kids, and they still couldn't say my last name. So then in seventh grade, basketball coach started calling me TJ, and it just caught to the point where my parents even call me TJ, and it's just short for my last name. My first name's Javier. My birth name's Javier. But TJ isn't Tijerina Javier. It's just the T and the J from my last name.
Mm.
And it's just one of those things. My brother retired as an E8 in the Marine Corps from the Marine Corps, and they called him Master Sergeant TJ as well. So it just kind of caught on as a family because our last name's one of those that's a little bit tough to deal with for sure. What's going on, Rodriguez? Hope everything is going well. Anyway, guys, I put the stream on there. If you guys want to come on, ask us anything. We want to follow the same format as like on Financial Junkies. This is y'all's stream. This is Wheelers. Ask us anything. Nothing is out of bounds because if you want to get your questions answered, this is the pod to get them answered. And we're full transparency, guys. I'm going to show you the good, the bad, the ugly, and the indifferent. Now back to you, Chewy. What is good with the portfolio? Like you've been making money because everybody's been making money.
Yeah. Hmm.
So you're essentially running with the trend. The trend is your friend. What maybe is the bud from the standpoint like what it has the potential to be good, but it's not necessarily there yet? Is there like a strategy that you're kind of like jacking with a little bit, but maybe you're not so comfortable? Or is there a stock that you just started wheeling that maybe you're not sure if it's going to be a long-term hold? Like what's the bud in your portfolio? And then we'll talk about the thorn in your side because everybody has a thorn in their side in their portfolio.
Oh, I also have PayPal as well. I got that one at $60.
Oh, that's a great entry point for pay.
Yeah, right now it's at 68, and I think I sold the covered call on it at like 67. So now
Okay.
it's like a dollar above it, and I'm thinking it's just gonna keep going higher. To be honest with you, so that one's probably gonna be the one that's gonna hurt me the most, like in the short term. But in the long term, it's gonna play out all good. And then for like the short term, I do credit spreads, which that's like a little bit more advanced, and it's basically like how that other guy was doing it as well. Um,
Vic. His
and
name's Vic.
it's a little bit tough, like whenever the market does go against you, like you do have to close things out early if it does like go against you.
Right.
Um, because there was times like I did one on target and it just like kept going down. And I was like, dang. So I just kept like rolling it down, and eventually it did like it started running like the other way, and thankfully I did get out of it on a profit. But uh, doing credit spreads can be hard at times, especially when the market does go against you.
So that's kind of like your bud and your thorn.
Yeah, for sure.
Yeah, so I experimented with a lot of stuff. I never shared on this channel, guys. But I bought calls, I bought puts, and I actually did pretty well with it. It was just like my little home run trades, my major cash grabs, because the way to risk the least amount of money and potentially make the most is by buying calls. But you have to be right directionally and you have to be right during a certain amount of time because all the forces are going against you. But I did that semi successfully for about 6 months. But it's only because I hadn't allocated enough capital to be in a wheeler yet. So once I got my capital together, I was like, dude, let's take the stress out of the equation because directionality is not my game. And I don't think it's anybody's game, quite frankly. Some people have just diluted themselves to the point where they really think that they know when the market's going to move in a certain direction. And I'm just like, why don't I just position myself so that I can collect theta? Because selling puts, selling calls, and collecting premium, the theta specifically, that's a surefire way to make money in the stock market, in my opinion. To do it over and over again. There was a gentleman called Marcus. I don't know his last name, starts with an H. It was a German guy, and he's a wheeler. And he had put in 250,000 into account, and then he was using 250,000 in margin. So effectively, it was trading like a $500,000 account, and his goal was to try to make $15,000 a month. And he was able to do that successfully for about a year. And then I don't know, but I stopped following him. I'll have to look to see if he's still on there. Marcus Hoskitter or something. I'm not sure. He even wrote a book on the wheel strategy, and I've thumbed through the book. It's actually really, really good stuff. He's very, very conservative. He deals in the 0.15 to 0.2 deltas, which most people do, guys. A lot of people don't know that at the money is like about a 0.5 in general. So there's not really much higher that you can go. You know what I mean? But anyway, he said that the reason he liked the wheel strategy is because it was systematic, repeatable, and consistent. And that really stuck to me. SRC, right? Systematic, repeatable, and consistent. And that is what really made me gravitate towards the wheel strategy. So we're going to try to answer some of these questions right here, because our teaching segment is going to be, when do you guys, let me go to my notes here real quickly, because I got to make sure I control my ADHD LMNOP, guys. And Mr. Premium of the option seems to have some issues logging onto the stream. So hopefully he'll be able to figure it out here pretty soon. If not, we'll gladly have him on next week. But let me go to my notes here. And it is, and anybody on the panel can take the question. And if somebody else on the panel isn't convinced that the question was adequately answered, then by all means chime in. Fair enough. That way we're not like on other podcasts, because there's other podcasts that I really follow. But one thing that annoys me is when people are talking over each other. Because it's just not like a ESPN debate, bro. Like we're talking about who's the GOAT. Say that for the barbershop. Like we're trying to educate people on all things wheel strategy. Fair enough. So for anybody that ever comes onto the podcast, we're not that debate channel. We're literally trying to tackle some nuances and intricacies that specifically deal with the wheel strategy, so that we can all learn and grow together. But here's the teaching segment. When you do take assignment, when do you take assignment versus rolling on cash secured puts and covered calls? So who wants to take that question? When do you choose? Because I feel like as sellers of options, as sellers of premium, the choice essentially is ours, unless the shares get put on you prematurely or get called away from you prematurely. So you decide whether or not you want to take assignment or whether or not you want to roll. Like Choi decided to take assignment on target. You didn't have to. There was not a gun to your head that said, hey, you can't get out of this contract and roll out. You wanted to own target at 130 or whatever your strike price was. And then now you're wheeling it and selling cover calls against those shares. So I want to ask you, Option, because you have a lot of experience and you're from that, as am I. I've learned a lot from Tasty Trades. I mean, dude, they've forgotten more about the Greeks than I'll ever care to know.
Yeah.
I mean, these guys are just way nerdy over there for sure. But when do you take assignment versus rolling on cash secured puts and covered calls?
Like I really, if only way I'm going to take assignment is if I just have to. That's the first thing. Where all the extrinsic value is out of that put that I'm selling. That's the only way I'm going to, pretty much take that assignment. But I'm always starting the position, further out in time. So that's going to give me the ability to be able to, and it's 2 times when I might start rolling. I'm either going to roll as soon as the stock price hit my strike, because, right at that point, that's when you have the most extrinsic value in that option. So making a roll right then and there would be great. Or I'm going to make that roll at my break even. So I'm never going to just take assignment unless I just really have to. Either I'm going to do everything I have to do, roll it out, turn it into a strangle, a straddle. I'm going to do everything to build and take in as much credit on that cash secured put so I can get it as cheap as I possibly can. Now, at that point, when I do have to take assignment, then, we automatically start going to sell it, the calls against it.
So what about the cohort of people? Because I'm going to try to play a little bit of devil's advocate so that we can challenge the brain. What about the people that say, I don't like selling cash secured puts because you might never own those shares? And everybody knows that if you buy PayPal at say 60, like Chewy did, we all know that at some point PayPal is going to go back to 100.
Right.
So all the puts and calls that you can sell on PayPal are probably not going to equate to the money that you'll make by just holding the share. So at some point you have to own them if you want to be able to grab the loaf. Because I always say the premiums are the crumbs, the share price, the capital appreciation is the loaf of bread, right? The cash. We're talking about the bread. So expand a little bit on your thoughts on that, because it sounds to me like your mindset is a little bit of a cash wheeler, meaning you use cash secured puts as a glorified cash position. And if you own these shares, you're going to sell covered calls, and you're actually okay with them getting called away from you, and you ultimately want to be back into cash, because that is the essence of wheeling. Make no mistake about it. I'm a wheeler with the twist, guys. I actually want to own shares, and once I own these shares, it's real hard for you to take them away from me, because I hold and hope is what I know. So option. Am I hitting the nail on the head with you?
Absolutely. I mean, for me, if I can be profitable and I don't have to necessarily own the shares, I take it that way.
You want to think like this.
Exactly. Because I mean, it is risk with getting the shares, you see. Right. So if I have to, then, I take them. But if I don't, and I can constantly, manufacture a win by continuing to make money, time after time after time, then, I don't mind doing that. But I'm always putting myself in a position to stay close to that stock price. So when I'm rolling out, I'm rolling closer to the stock price. You see what I'm saying? So at some point, if I do get that downturn, I'm not, behind the stock too far. I'm constantly following that stock up and taking in premium. So if I do have to get long the shares, I'm going to be able to, get it at this pretty much a good price, Right. So I'm going to continue to follow it. So my rolls are going to increase up, so that means I'm going to be taking in more premium. And if I don't get it, then, I just continue to make that money that way.
I hear you, man. There's nothing wrong with being a cash wheeler, is what I call them. A cash grabbing wheeler is what I call it, because I was that for a long time, especially whenever market conditions are very uncertain. And I think that we are definitely in uncertain times still. They paused, they didn't stop. The Fed hasn't said, hey, we're going to lower interest rates definitively on X date or anything like that. So there's nothing wrong with that strategy. Me personally, I'm still that to a certain degree, but I also have price targets whenever I start wheeling these stocks, and I'm like, okay, I want to own an X amount of shares. So at some point I got to pick some up, because like in every position, I don't know that I've ever said that. So roll the tape on this one, guys. Every position that you see in my portfolio, I'm trying to get to at least 20,000 shares. So at some point I got to scoop these freaking shares up. You follow me? Now I would love to have 20,000 shares of Riot at $4, because at some point it was at $4. But brother, if I was that good, we wouldn't be here. I'd own an island somewhere. You follow me? I sell puts and I sell calls because it gives me an ability to scale into a position. I can't figure out the best entry points. I sure as hell can't figure out the best exit points. So I'm just kind of taking what the market gives me along the way.
Correct.
And then at some point, there's going to be parabolic moves, either up or down on stocks. And that's typically when I get caught with my hand in the cookie jar. And I'm like, screw it. I'm just going to go ahead and take ownership of these shares. Or if the shares dip so much, I'm like, I don't know when they're going to go back up, but I know that they will. And that is how I scooped up the majority of my shares of Riot. You follow me?
Exactly. That's sort of like
I do a lot of buy right. I do a lot of buy right.
That's sort of like, what I did with Coinbase, because that's really a company that I want. So
excuse me 1 second. baby, can you grab me a Dr. Pepper, please?
Yeah.
Sorry.
So that's sort of like what I did with Coinbase because, I know that the premiums are always going to be in Coinbase, right? So that is a company that I'm just going to always continue to try to get as many shares as I can with their account size. So if the sacrifice has to be made, I'm going to build a nice, good position in Coinbase. So yeah, I definitely understand where you're coming from with that. It's just some companies where you got to just take the assignment whenever you can. So yeah, definitely agree with you.
Absolutely. What about Chewy? Is there anything that you would like to add to that, my guy? When do you choose to take assignment versus rolling the position? Because a lot of people have percentages, and I'll chime in at the end as well.
So like obviously first you have to do it like on a stock you really want. So like for me, I really wanted Target and PayPal, and I was like, I do a little bit of technical analysis. So I was like, this might be the low, so I think I'm gonna like take assignment on it. And then I really think that Target and PayPal are still gonna keep growing anyways, no matter what does happen, like with the economy, because I think PayPal is still growing very good, and then Target, they're obviously like going through that, and then like people like shoplift there a lot as well, so they're going through that as well. But I don't think those are tough problems to like solve, so I think they can definitely do it in the long term.
Right.
But other than that, those are the only things that I would say.
So for me, guys, when do I take assignment versus rolling? It has to do with where I'm at with getting to my overall objective with that particular stock. So if it's a company like SoFi, and ultimately my goal is to have of SoFi, it's not 20,000 shares, it's ultimately 25,000 shares because I wanted to be the largest holding in this particular portfolio. Right now I have 50 cash secured puts that are in the money. And in a little bit, we'll do the real quick rosebud thorn when we finish the teaching segment, and I'll show them because we're going to do the one big trade as well, right? So I'll have my portfolio on the screen by that time as well. So it has to do with a couple of factors. Was I like legit just cash grabbing when I entered into this trade? Because if that was the case, then I'm going to keep rolling and rolling until there's a legit opportune time to get out of it unscathed. And I'm going to take my bag and I'm going to move on to the other trade. Mm-hmm. But a lot of times the reason that I choose to roll is because I can't find anything in the landscape that appeals to me more than just extending the contract that I'm already in because it's still good. Mm-hmm. And if I could potentially lower my strike price on SoFi, because I have 50 cash secured puts in the money on my portfolio that I'll show in a little bit that are at $9, I'm okay owning SoFi at 9 because my aggregate average is like 614 or 617. So it's not going to bump me up that much. It would be an average up because I already have 16,500 shares. So bringing on 5,000 at $9 isn't really the end of the world. You follow me? Because I'm still going to be able to sell very aggressive cover calls against those shares. But if I'm like, hey, I thought that because of all the euphoria, I brought cash secured puts in from January of 2024. I moved them out and up and in. Mm-hmm. The strike price, I went from 550 strike to $9. I assumed more risk. I pumped out more collateral because I wanted to grab the bag, but now I got caught with my hand in the cookie jar. Let's just call a spade. That was a mistake. So now I'm going to use the roll to be my magical eraser for my mistake because I got greedy. Mm-hmm. Right? You know, they say that pigs get fed, but hogs get slaughtered. Vic, you're old enough to know that phrase, right, Vic? Pigs get fed, hogs get slaughtered. So right now I'm getting slaughtered on that cash secured put. But I know that I'm just going to let a little bit of time run off the clock. We'll go over the intrinsic values versus the extrinsic values when I open it up here in a little bit. And I know that I'm going to roll, but I do eventually want to take assignment. If Mr. Market will give me those 5,000 shares of SoFi at 750, I'm going to take them. And oftentimes what I do, guys, another thing, this is just higher level wheeling. This isn't sell put collect premium, let the shit expire. It's either in the money or out of the money. You're either going to own the shares or you don't. And then we're going to sell a covered call. And then they're either going to expire in the money or out of the money. You're either not going to own the shares anymore. You're still going to own the shares. And then we're going to move on to another contract. That's wheeling 101. We're giving you graduate level wheeling right now. Please hit the thumb if you guys think that we're giving you guys more value than just somebody who does a little video that says sell put, sell cost, collect premium, like the logo that Troy created for us on the channel, right? So what I do is, let's say SoFi, $9. I got caught with my hand in the cookie jar, but SoFi were to tank to say 6. I will probably go ahead and buy outright another 4,000 or 5,000 shares of SoFi at 6, while rolling down my cash secured puts at 9. And then now I'm like, okay, at some point I need to be able to kick this can down the road and let SoFi come up and get out of this cash secured put altogether, because I already achieved the objective, which was own an additional 5,000 shares of SoFi. But instead of picking them up at 850 or 8 or even 750, the market gave me an opportunity to pick them up at 6. And then that cash secured put, I might kick that damn thing down the road to January 2025. You follow me? I know that's a lot. Rewind the tape. But I run all kinds of covered combinations, strangles, whatever the hell you want to call them. I call it making money. Like, however I can figure out a way to manufacture the win, I'm going to manufacture the win. So if it's just a cash grab, I'm looking for 75% profit. If it's a month-long contract. If I do something like a 2-month contract, I'm comfortable in the 50 to 60% range, very similar to what Tasty Trades preaches. And I like to manage my positions about 20 to 25 days to expiration, because all the forces aren't against you that aggressively if you manage your position early, guys. If you want to have the least amount of stress and make the most consistent amount of money over time, sell 30 to 45 day covered calls and cash secured puts and manage those positions about 21 days out, and you'll be on easy street for the majority of your career, in my opinion. Would you guys like to chime on that statement, or give me a counter argument if you think that there's a better way to handle it, or an easier way to handle it, shall I say?
Just to add on to what you're saying, and the reason why, you know, we when we sell these cash secured puts and we manage them within that time, and one of the reasons is because of gamma. So we got to remember some of the Greeks that, you know, are going for us or going against us. So by the time that 21 day mark, studies been said that, you know, your gamma start to pick up right beneath that 21 day mark. So, you know, that's one reason why it's a good idea to manage it, you know, within that 21 day mark. And it's also said that you should be at least 50 to the 50% mark. And then you want to keep your account from fluctuating so much. So those are just good reasons to add on to what you was already saying, TJ.
Absolutely. We're going to get into this, Dean. What did I do with my Tesla cover call? I haven't done anything with it. I got to. I do not want to have those shares called away. There's probably very little extrinsic value left, because the deeper that you go in the money, it all becomes intrinsic value. And whenever you don't have any more EV, extrinsic value, you do run risk of having those shares called away from you early. Especially when the person on the other side of the contract may not know all the Greeks, but they're just seeing this big ass profit on their side. They have enough money to exercise the contract, and they want to be able to show their wife, hey, look, I'm doing something good in the market, right? So it's like, this idiot agreed to sell me Tesla at 195 because this is this idiot, 2 thumbs, right? I agreed to sell Tesla at 195. So I could have those shares called away from me if I don't do something with that pretty quickly, even though there's still, 20 some days left on that contract, because it is so deep in the money. It's crazy. It's crazy. So
hey, TJ.
Yes, sir, Vic. Chime in.
I just have one comment. I agree with everything everyone's saying. I've found that I'm more of a roller than a wheeler, because rolling, if you don't look at your portfolio and look at the different positions, whether they're calls or puts that you can roll, you're leaving a lot of premium on the table. And I'll write put like 6 weeks ago or whatever when SoFi was down,
Right.
8 weeks. I'll write puts on it down low to get more shares below my current average cost, but also buy shares and turn right around and write covered calls on them. And then roll those. Or I don't let a whole lot expire, because I look at what's left in, like with Tesla. If I've got, $1 to $5 left on, I'm rolling that bad boy. I just rolled some Tesla 175 puts for this Friday and next Friday that I rolled to this Friday from the 175 up to as high as the 245. And instead of sitting there waiting for it to expire for $2 next week. So there's a lot of opportunity in there when you start looking at the nuances with rolling. And grabbing your stocks with the puts when they're in your price range. And we've all gotten caught with things like covered calls I just lost another 100 shares of Apple 2 weeks ago, I think, to a covered call. I just couldn't get out and someone executed. But that's part of the deal. It's not the end of the world. In fact, I don't even give that a thought anymore. And before options, I thought that was the worst thing that could happen.
So on that point, let's do another teaching moment. How long did it take you guys after implementing the wheel strategy and specifically selling covered calls to overcome your fear of having these shares called away from you?
Mine was the first Apple I got pulled, and I thought it was the end of the world. And in 10 minutes, I was over it. It didn't matter. It was just a stock. I made money on it. It got called away. I'm going to make more money on it and write puts and write more covered calls.
Absolutely. Because it still gives me a little bit of anxiety from the standpoint of when I know that I have a lot of open cash secured puts that are sold on margin. So I need those shares in my portfolio, or it's going to cause a series of events that are unfavorable for my portfolio as a whole. So when I'm over levered, I have a lot of covered call anxiety, if you will.
Yeah.
When
I don't use margin.
When I'm sitting on a lot of cash, I'm like, I'll take my money and run. I know that these shares eventually might come back down, especially if he tanks the market and say he were to go 50 basis points in July.
Mm-hmm.
Everything's going to be on sale again. Like, we don't know. Like, that's why all the euphoria in the market, I don't understand it, right? I used the word of the day. The other day was sanguine, right? I think that everybody's a little overly optimistic in the market as a whole. The summer sell-off didn't happen yet. I think there might be a 10% slide to the downside, in my opinion. So that's why the covered calls, even though they're stressing me out right now, I feel like they're still going to come into my wheelhouse and we're going to be okay. That's what I think. Now, the Tesla one, no. Tesla runs to the beat of its own freaking drum. I think France announced that they want a gigafactory. Freaking Elon was in China. Who the hell knows what they're going to try to do over there? I think Rivian said they're going to be using Tesla chargers. I mean, dude, it's like Palantir, man. Anytime I look up, there's another contract. There's always something good with the damn company. And now I'm just eventually overweight. Because I hate watching him his channel sometimes because I'm afraid he's going to tell me about another $100 million contract, and now I want to buy more shares of Palantir. So I'm just like, I already have more shares of Palantir than I ever thought I wanted when I entered into the position. But it has a lot to do with how the portfolio looks as to whether or not I want to roll or take assignment on covered calls specifically. Or the other thing that maybe people don't talk about, and I'm not qualified to talk about it. I'm not a CPA, but I'm going to give it to you guys. Full disclaimer, not a CPA, blah, 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 right? It's for tax reasons. I will not close out that covered call, even though there's no more juice to squeeze. But let's say it's for January of 2024, and I'll be sitting at like 95%. I could close it, get into another one. I'd rather push out that taxable event for the following year, if that makes sense. So again, I'm trying to give you guys everything that I can. That way, if someone's new to the channel, we can be like, bro, I have 700 videos. Just go watch the 2 episodes of Wheelers, because it's all there. I'm trying to give you guys everything that we possibly can give you guys so that you have all the value there, and you're only investing an hour, 2 or 3 hours of your time, and everything that's in our brains is already in yours. Anyway, guys, without further ado, let us reintroduce to the channel a friend, Mr. Premium of the Option. My guy, tell us what's good real quickly, what's not so good, what you're working through, and then we'll wrap up the teaching segment of the day, and then we're going to introduce the last two segments, which is Fix My Trade, because I need help. So I need y'all to fix my trade. And then we're going to find something that I can sell a put on live on for everybody here.
Okay. So, obviously what's not good is my internet connection. Man. So, I have a 12-year-old son, and he's on summer break. And, he's upstairs downloading a movie, downloading, something on Switch, playing PS5. So obviously my connection is subpar today for sure.
It's overloaded.
But we're trying to get it figured out. The good in my portfolio is, I think I mentioned it last time, was I've been able to manufacture the win on GameStop, GME. It's been really good.
How did that AI trade work out for you?
Oh, that was beautiful. There was a buddy of mine on another channel. He made a post. He made 10,000 on that trade, man. So that was beautiful. That whoever took that trade, that expired worthless.
Right.
So that was a beauty. The thorn is still. I'm still lingering with too many darn companies. I need to consolidate, and once that happens, it's going to be a lot better for me, and I'm going to really be able to get some massive traction. That's pretty much about that.
Gotcha. So let's talk about being overstretched, if you will. So what Mr. Premium of the Option is saying, what Ralph is saying, guys, is he has too many companies in his portfolio. So there's a couple of downsides to that, in my opinion. One is it's real hard to beat up the adjusted cost basis because there's only so many dollars to go around per position. So I tell people, if you want diversification, get into an ETF. If you want to wheel successfully, take your favorite handful of stocks and sell puts and sell calls on those guys over and over and over again, so that eventually your wheel tracker will look like our wheel tracker, and you're going to own these shares with other people's money. But if you only have $250,000 to work with, like we do in this portfolio, I was doing it all wrong. I don't know if y'all followed the channel early. I had like 12 to 15 stocks that I was wheeling, and I wasn't getting anywhere with these stocks. I took some small losses, the BNGOs, the SENS. There was a handful of stocks that I lost a little bit of money on that I believed in. Thank God I got out of them, because none of them have worked out since I got out of them. So I didn't see a path to profitability in some of these companies, and I didn't believe in the leadership the way that I do in the SoFis and Palantirs of the world, right? Enphase, that's one that I got 25 open cash secured puts on Enphase right now. I am really, really excited about the leadership in that particular company. I think they have a very substantial moat as well with their inverters. It's a solar play, guys. Financial Junkies talks about it all the time. Vitaly is a big bull on Enphase, and I believe Carlos is as well. I think Chris Patel is waiting for his price. I think his price, and knowing him, I mean, I don't know him, but I already know his investing style. This guy's probably trying to scoop those damn shares up at like 130, 140. And right now it's trading in the 170s, I believe. So, and then I'm trying to scoop shares up at 150. My cash secured puts at 170. So I'm going to keep rolling and rolling and rolling. And I don't give a damn if it tanks to 130. I will take ownership at 150 and just start selling cover calls there, because I believe that 150 is a good entry point for the first bullet. The second bullet would be at like 120 if the market were absolutely to tank. If I can get them under 100, that's an easy 3 to 5x in my opinion. So, but I sell puts where the market says I need to be selling puts based on my deltas, and I'm going to take whatever the market gives me. But you have to condense the focus, guys. It's like a magnifying glass. if you have the magnifying glass, let's say this is the magnifying glass, and if you're like this, no matter how bright the sun is, you're never going to start a fire.
Mm-hmm.
You're going to have to focus and focus. And that is the key to this whole thing for me is once I ran with my 7, right? We'll look at the portfolio here in a second. Once I decided what the 7 was going to be, I was like, I could legit manufacture the win, but let me concentrate on 2 or 3 of them at a time.
Mm-hmm.
And once I manufacture the win there, then I'll move my attention to the other 2 or 3 or 4. And then eventually I'm going to look up in 2 to 3 years and my adjusted cost basis is going to be 0. And at that point, I can finally sleep at night. That's all of it in a nutshell. Let me see if I can share my portfolio, and let's enter into another part of the wheelers, which is fix my trade. So let me get into that. If y'all can go through the questions here, guys, if y'all can read the thread for me, make sure that we didn't miss anybody's questions so we can answer them accordingly.
Let's see.
Hey, manager, I'm seeing one of your posts there, buddy. I don't have Tasty Trade. I use Schwab. So I'm not your man for Tasty Trade setup.
So let me get into the portfolio, guys. We're gonna do a real quick portfolio update, and then I'm gonna ask y'all to fix my trade. And when I say fix my trade, it's gonna be that Tesla 195 covered call, because I'm just looking at it and holy shit, it's got $71 of intrinsic value and only a couple of dollars of extrinsic value. And it's Tesla. It's a cult. People want to own Tesla. So I feel like it is actually at very high risk of early assignment. So I want to find a role that makes sense for a net credit so that I can just like put it on set and forget. But let me go into what we got going on here with the portfolio. I've got the cash curve puts on charge point at 850. Those are in the money, but they're not that deep in the money, guys. I mean, my break even is 816. So it's right at the break even point right now. So I feel very comfortable there. I can let that ride out for a while. This is a nice winning trade here. We've agreed to buy right at $10. It's currently at 1074. So this is definitely part of the rows in the portfolio. We got a break even of 898. At some point, I'm going to look to close this trade out so that I can get even more aggressive with ChargePoint and SoFi, because my Riot position is doing really well. So I need to free up those dollars and put them into something else. But I like to do it when I'm at least at about 80% or so, because that's a sleep easy trade. I don't want to take on a higher risk trade just to free up the money prematurely. So this one here, SoFi, went against me, right? We rolled this one up. We collected quite a bit of money. We went from January of 2024 to 630, and we went from a $5.50 strike price to a $9 strike price because I thought that SoFi was going to keep running, and I wanted to free up all of this collateral. It didn't work out that way. So now I have to look at what's my intrinsic value versus my extrinsic value. The intrinsic value is going to be the strike price minus the current market price. So in this case, I have 55 cents of intrinsic value and 30 cents of extrinsic value. So there's very low probabilities that people would relinquish 30 cents a share just to own SoFi now, which is a non-dividend paying stock. So I don't have to do anything right now. I can just let the theta run off the clock and collect that 2 cents a day, because this trade will be favorable for me to the tune of 2 cents, all other factors being even, staying even, if you will. And then we got the NEO covered call. This is definitely in the thorn category. We've agreed to sell NEO at $9 and it's already at $9.19. So it is in the money, but it's not deep in the money. And the option is priced at 81 cents. So that's going to be a derivative of intrinsic value versus extrinsic value. Again, on the covered call, it's the 919 minus the 9. So there's only 19 cents of intrinsic value, and everything else is theta decay, rho, vega, etc. So no risk that NEO is going to get called away prematurely. Plus, we have a break even of 945 after you calculate the premiums that we received on the front end. So there's nothing to do there. But this one here, a little bit different, guys. This is where I want to say, hey, I screwed up. We all saw me screwing up. Nobody helped me. So now I'm reaching out for help. Fix my trade. What would you do if this was your portfolio? If you fix my trade, I will cash out you $10. I have an idea of what I want to do. So I'm going to walk y'all through that idea. This is what I'm thinking. I'm thinking I'm tired of jacking with it. I can't wield Tesla for the life of me. So it just has to be a share price appreciation play. And I'm literally thinking I want to kick this damn thing down the road to January of 2025. And it's $73 to close out the positions. So I want to collect more than that. And I'm thinking I want to do something in this range right here at 270. That's what I'm thinking about doing right there. And I'd pick up a cool $554. But now I'm qualified to participate in capital appreciation to the tune of $270. And they would pay me a cool $500 for doing so. But then essentially I've just tied my money up, but I've also secured my bankroll from the standpoint that there would be virtually no risk that these shares would be called away from me prematurely. But this is just a Band-Aid trade, because at some point Tesla would probably be trading in the 350, 375 range. And I'm over here going to be stuck trying, agreeing to sell them at 270. So I would have to enter into another Band-Aid roll and eventually be looking at January of 2026 and hopefully increasing my strike price to like 300 and just kind of keep trying to get that capital appreciation that way. Now, the reason I'm okay with that trade or something like that is because I'm legit long Tesla. I want Tesla in this portfolio until 2030. So if I have to sell, roll a covered call one time a year for the next 5 years, 7 years, I'm okay with that. Because when I tell you that I'm legit long a stock, I'm legit long a stock. I don't want anybody to take those shares away from me. But when I entered into this, because my other buddy convinced me, he's like, hey, dude, we can just keep doing it in increments. We'll go from 195, because he's in the same trades, 195, 197, etc. Well, he already had his shares called away from him. So I know that this shit can happen. You know what I mean? So I don't want that to happen to me. So let's put it on here, guys. Who can help me fix my trade? I'm open to suggestions.
Okay.
Suggestions. The floor is yours.
Well, I mean, me personally, you in the so TJ, you in the July 21st, 2023 cycle, correct?
Yes, sir. Let me
All
pull
right.
up the option. Let me pull up the option, my guy. Hold on.
195.
That's me right there. So we've got an intrinsic value of 71, 75,
Yeah.
and it's priced at 74. So there's still a little meat on the bone on the
Yeah.
exit. I don't think
got
all the way right now.
Yeah, you still got about $1.50, close to $1.47 value still left. So I would definitely kind of hang around a little bit longer. And also considering the fact that, and we don't know what's going to happen. They got earnings. It's not, it says it's July 19th. It's not projected, but I'm sure it's going to be in that July cycle. So that can definitely, help you out as well, considering we don't know what's going to happen. But, I would be patient for now and get a little bit more of that extrinsic value out and see if we can get a drop. And if not, then, I personally wouldn't roll out that far right yet. I would just kind of roll out to probably the, if we let a few more days come off of the 31, I'll probably go to September, probably roll up, to the 200, and just be patient,
So you're saying do something like,
yeah, let a little bit more of the extrinsic value come off of this one.
Something like September the 15th, and then maybe go to like 200.
Yeah, and I'll just be patient for a little while.
Yeah, we can do that, and I can collect right now. If I did it right now, I can collect 160, and now I'm able to participate in capital appreciation. I like the style. I like where you're going, option, because one, I don't have my shares encumbered for that long, and I give time for the market to potentially take a shit. If it doesn't take a shit, we know that we have my Band-Aid trade locked
Yeah,
and
you
loaded.
always got that. Exactly.
Yeah, I
Exactly.
always have that, but it would be nice for Tesla to take a dive, and then now all of a sudden I'm wheeling again.
That's what I'd be playing, TJ. Tesla is so overbought, and Tesla is its own animal. I would, if it was mine, I would probably roll it out to like maybe 3 or 4 weeks, even at the 195, waiting for a decent pullback with Tesla and try to narrow that gap. And like, we're saying, like options saying we need to, keep making some premium, and let's wait it out a little bit and let Tesla come down. It's just so far overbought.
Yeah. Abraham, I've only had Tesla for 2 or 3 months. Early in the game, I got these shares assigned at 185, if y'all remember. Option, what do you think, Mr. Premium? Talk to me.
Yeah, I like what they're doing there. Sometimes you got to do just the arm folding and wait it out. See what type of macro news might be coming out here in the next little bit. But it's too much of a run up, I think, as well. I think it's due for a little pullback, and you can capitalize on that bad boy.
I like what you guys are hearing. What about you, Chewy? Talk to me, my man.
I'm still thinking the same thing as them. I would probably do the same thing as
Y'all are
them.
all saying is y'all are all better wheelers than me. Got it.
Now we all have a different groove than you do.
You guys are right. You guys are absolutely right. But I wanted to go through this exercise because Mr. Premium said it. Mr. Premium said it. The arm folding technique, doing nothing, is the hardest thing in the market. Letting time run off the clock, you would think is what everybody wants to do. You're getting paid to do shit, right? That's the dream. That's the American dream. But it's so hard to do because as worker bees, we're all programmed to be worker bees in high school and college, etc., right? It's real hard to realize that time can legit be on your side when you're the seller of premium. So I wanted to go through this exercise. I have zero intention of doing anything with Tesla for the next 4 or 5 days. Talk to me next week. And I'd be lying if I told you that I wasn't going to address it, because I do not want to get in a margin maintenance situation. However, I have some winning trades on the books right now that are going to save me. We already know that I can free up $25,000 for a cool 800 here and win that trade on Palantir. So what I'm actually looking at doing is freeing up enough capital to sell some very aggressive cash secured puts on Tesla and start grabbing some of that premium as well, because ultimately I like to have 1,000 shares of Tesla in this portfolio. So that is where the advanced wheeling comes into play, guys, is people get stuck on one side of the fence. If you really want to beat the shit out of these stocks, you need to be playing both sides simultaneously. So that's why Tesla is hard to wheel, because it takes a lot of money, guys. It takes a lot of money. So what I'm looking to do is be patient, but the money that I'm potentially leaving on the table, the risk that I am incurring for trying to milk this extrinsic value, I could negate that by selling some more cash secured puts. And I can because we can look at that. You're like, what could I get if I could sell a couple of cash secured puts on Tesla right now? And then we can talk about what would be a good strike price and all that stuff for that. But that is what I'm really looking to do, because this guy keeps getting away from me. And if I can't beat it up on the covered call, well, maybe my cash secured puts will print money if it keeps running up. So that's kind of what I'm looking at. So I'm looking at something like maybe do something like July the 21st, so it could like legit be a strangle, right? Because I have the same expiration dates, different strike prices. And then I could look at something like the $230 range, which is a 17 delta, very, very conservative, guys. So that is something that I could consider doing. I could pick up, almost $1,100 for selling 2 cash secured puts on Tesla for July the 21st. And now I can be patient, because now if it starts breaching my cash secured put strike price, and that causes me stress, guess what's not causing me stress anymore is my covered calls. And if it keeps running, my covered calls are going to keep causing me stress, but this cash secured put would be printing money. So there's different ways to alleviate the pain, but you need to have the versatility of a bankroll, and you need to have the courage of your conviction to pull the second trigger. Because if I'm not willing to pull the trigger now on more shares of Tesla, then when am I going to be able to pull the trigger if it keeps running up? Because it's expensive to sell them at freaking 240. It's going to be even more expensive to sell them at 270, 280, or whatever the case may be. So that's kind of what's going on in my head. If you guys want to chime in and tell me if you think that I might be on the right track. And then I'll tell you what you guys have coming to you for participating in this segment called Fix My Trade, because y'all are all going to get little gifts from me today.
I definitely agree with you with the selling of the put. I don't like to do the weeklies, but I would go in front of the earnings, which, like I said, is saying it's July the 19th. So at least if you do it in front of the earnings, you can get it to expire before, that earning play.
Or I'll get out of it. Yeah.
So, but yeah, I mean, like you said, you have to play both sides of the market. And at this point, this is where you utilize that technique to take advantage of both sides. So, yeah.
What about you, Vic? Talk to me with your expertise, my guy.
Hold on a second. Okay, I want to make sure I was off mute. I agree. I do that sometimes too, and playing both sides, you can. Sometimes you make them both, sometimes you don't. And I don't like rolling out real long. I don't roll out to January or June the next year usually. If in like markets like now with everything up so much, I'm typically trying to roll out just a week, 2 weeks, 3 weeks at a time, unless it's something like a Tesla or an Apple, and I've got calls that are $30-$40 under the share price, because you can get those called away pretty easy.
Right.
So yeah, times like this, I've been waiting for that pullback for quite a few weeks now. The June dump didn't really happen yet. Maybe it's going to get pushed into July, like Option was saying, because it's got to pull back at some time. You look at the charts and the RSIs, and just some of these spikes are just crazy. I think you can get out of this without killing yourself. I'm sure you feel the same way.
Agreed. So mini wheel deal, Alex designed some shirts for us. I already sent them to Mr. Premium. So Troy is actually having them made. So I had 10 made. So they're 5XLs and 5 large. So let me know what size you are, and I'll shoot you over a shirt once I get them in my possession. For participating with and Fix My Trade. And then I owe Option a Cash App. So send me your address, my guy, for the winning trade last week. And then we're going to do that segment. Give me your best trade idea. Got a little bit of money. I'm even willing to potentially give me the right trade that gets me excited. I'm even willing potentially to close out the riot puts and free up that money, and we can go heavy if I like your trade idea better than the one that I already have in place. But I'm going to lead off with this segment. The trade that I was looking at was I want to eventually have 4,000 shares of charge point. I got these shares at 10.14, and I already have an open cash secured put, 10 of them at 8.50 for 6.30. I was thinking about doing another 10 contracts at $8 for 6.30. and start beating up ChargePoint and ultimately trying to take ownership of 4,000 shares total and selling covered calls on those. That was kind of where I was going in my mind, because I'm like, if not now, when? Like, when am I going to get closer to the goal of having, at least 10,000, maybe even 20,000 shares of ChargePoint in this portfolio down the road? Because I think that ChargePoint is going to make it. I'm long on the company. I think that Tesla put a lot of pressure on them in doing all of these deals with Ford and GM, et cetera, excuse me. But I don't think ChargePoint is going out of business. Like, I think that they've got a pretty big market share. They're growing pretty rapidly in Europe as well. So that's what I was looking to do. I was looking to do. So if I want to type in, show y'all my trade idea, and then give you guys a chance to let me know what you guys have cooking, and then I'll pick the winning trade and we'll move from there. But this is the one that I was thinking. I was thinking to match it up with the other one, and it's at 823. I was thinking about 830. It pays pretty decent premium, and it's a 39 delta, so it's hella aggressive. And I was thinking about doing 10 contracts. So 10 contract would pay me, $320 at $8. So that's the one that I had cooking, and only because it makes sense for my portfolio from the standpoint that my ultimate objective was to double my position in ChargePoint, because I'm still angry at the fact that I wasn't able to double my position in Palantir whenever Palantir had gotten its butt kicked. I was trying to get to 5,000 shares and I never pulled the trigger, and Palantir just didn't give me another opportunity. And right now, the only thing I have is the covered calls that are in the money for January 2024. So essentially, Palantir has just become a glorified buy, hold, and hope at this point. So that's my trade idea. Let's just go down the road. Option, talk to me. What trade idea do you have for me today? Coinbase was an absolute winner last week. We made money with that. So I'm definitely going to cash app you the 10 for that. And then you got the shirt coming to you as well. Are you a large or an XL, my guy? I don't know how tall you are.
Large.
Okay, I'll get one for you. It's pretty cool. It's got the emblem on the front, and then on the back it says, "May your sky stay blue and your stocks green."
Okay.
And it's got TJ the Wheel Deal, like the little YouTube logo on the top or something like that.
Okay. Definitely.
So talk to me. I've got my Robinhood pulled up. What ticker do I need to type in that search, and let's go through it.
Well, there's really nothing out there, but I definitely just add on to, what you was going to do with ChargePoint. I mean, I don't know. I don't remember what expiration date you was in though.
6:30.
6:30.
Yes, sir. Right here. That's what I'm in right there. Can you see that?
Okay, got you. Okay. Me personally, what I would do, I just go ahead and go out to the 59 day, man, and sell that right in the money 9 call. That'll give you pretty much like a synthetic covered call, and I would sell that. You can get 10 contracts at $1.38, so that's what, 1,300 in premium, sell a 59 day, and let it ride from there. That's going to give you a synthetic covered call if you can look at it from your on your risk graph, and I'll let it roll from there. That'll pick up your 10 contracts, and in the event if you have to roll, you just roll that 10 out. Keep reducing the basis on it.
Right. Yeah, because if I look at my wheel tracker, my basis on ChargePoint is actually pretty good. I can actually let me do that. That way, everybody's on the exact same page as that. So let me get it going here. There we go. So there's ChargePoint. Are you guys seeing that right there? Mm-hmm. So the current share price is 888. My cost basis is 1014. My adjusted cost basis is 675. We have share zone 2000, open call contracts of 20, open put contracts of 10. We've made 6,700 on the share on the put premium and call premium. Our acquisition cost on the 2,000 shares was 20 grand. The open P&L is negative at 2,500. So that's all things charge point. That's what we got going on. So we're actually sitting pretty good with it at 675. But the goal here is obviously to get to zero. That's essentially the goal. So I like where your mind's at. What about you, Vic? What do you got for the week, my guy?
I've been writing puts on Symbiotic. It's down 5% today.
And what is
I wrote the July 21st $45 put.
What is the ticker?
SYM.
And was this that robotics play that you mentioned last week, or?
Yeah, and that ended really well for me. So I just sold the 410 July 20. It's a monthly July 21st put. I'm sorry, the $45 put for $410, about 9%, a little over 9% for the month.
That's pretty good. That's really, really good. How do you feel about the open interest? Because that seems pretty light, 175 and 161.
Well, see what I'm doing with that is I'm planning on rolling that in the next before it expires.
Okay.
I'm gonna roll that probably down to the 40 if it keeps coming down. If it keeps going up, I'll leave it alone until we get closer, and then potentially close it out, or if I've gotten most of my premium out of it. So yeah, that one I did planning to roll it down potentially. It's still $3 away from the 45 strike. It's a 35 delta. So when I hit a 35 delta, I'm usually figuring I'm going to roll it. But if not, I won't.
Well, right now you don't have to.
No, exactly. But if I get in trouble, I'm always trying to mitigate my risk and looking ahead. After I write this $45 put, then what? There's only a couple things that can happen. It can go up, it can go down.
That's a fact.
So I always try to be prepared for that too. Like I said, I do a lot of rolling. I like to roll things. I'll buy them in the 35 delta range, puts and roll them. Planning to roll them by that Friday. I do this with weekly options too. I'll write typically on a Monday. I'll write some Tesla or some of the bigger puts, and then plan it for that Friday and plan on rolling them by that Friday, either rolling them or letting them expire.
Absolutely. We already have a Discord. You got to get with Mini Wheel Deal, Alex. He's not on today. He's working at Walgreens, but we already have one. I don't do anything with it yet. I love the risk reward on Clean Spark. The only thing is I already have too much exposure. I'm just going to answer a couple of these questions, guys. I have too much exposure to Ride and Marathon already, but Clean Spark's a winner. He's got to be careful with dilution in the minors this year. I think this is the year of dilution still. Next year is the year to make money. So I'm using this year to build out my positions. And then I'm going to be very, very careful with the cover calls moving forward, because when these things run, guys, they run like 50, 60% in a day. And I don't care how much rolling you do. It's hard to defend a position when the underlying moves up so drastically.
Mm-hmm.
So anyway, hey, what's going on, Iceman? I appreciate you, Mark, on saying that this is great content. Somebody said, how do we utilize margin? Trying to find that. Here we go. Julio is asking, can we discuss how we use margin? I don't recommend anybody use margin, but I use it to sell cash secured puts. Mm-hmm. It gives me buying power. I have taken ownership of shares on margin, but that is why you see covered calls out in the distance, guys, is because I had to use that premium to satisfy my margin because I didn't want to keep paying interest to Robinhood. Mm-hmm. So a lot of things that you see in the portfolio that don't make sense, if you don't know the entire backstory, it's very, very hard to piece together the puzzle. So that's why if there's something that doesn't make sense in my portfolio, I'll walk you through what my thought process was, maybe direct you to a couple of videos where I covered that particular topic and how it made sense at the time, because investing is so personal, guys. I cannot emphasize that enough. Like, there's going to be things in your portfolio that won't make sense to me if I'm looking at it for the first time, because I haven't followed the history of everything that you got going on with it. Mm-hmm. So anyway, what about you? Appreciate your input, Vic. I'll definitely take that one into consideration. I think it's a pretty safe play. What about you, Chewy? What do you got going on, my guy? What are you eyeballing for a cash secured put? I've got a bit of money to work with.
I was gonna say I'm gonna like do something a little bit less risky, and I'm gonna do a target one because it's coming down right now. It's at 132, so I would do one at 130, like 129 ish.
So
And I
you're
know it doesn't have like the most premium, but I just
what
like
expiration date are you looking at?
um probably June 30th. I usually like to keep mine within a week or 2 weeks. I know it doesn't have the most premium, but for me, I like being a little bit more safe. I'm a little bit more of a cautious investor.
Yeah, but I mean that's over 1% for 10 days. That's not bad. I mean that's actually not that's not horrible premium. And I like that it is very liquid. The only thing that I don't like about that trade is I don't know how I do think that the public as a whole has a very short-term memory when it comes to these political agendas, if you will. But I don't know how long Target is going to be firm in their stand, in
Hmm.
their stance and shoving
Yeah.
that agenda down our throats as consumers. Fundamentally, if you just look at the actual business, it's hard to argue, dude. I mean, you can move your whole life in a Target bag. I mean, these damn Target bags are sturdy and steady. And I think that Target's not going out of business or anything of the sort. I'm not real familiar with their management, but I've seen a couple of their guys. I think it was a year or two ago, came out on Kramer, and they seem like very, very well spoken. I know it's a very well run, oiled machine. Maybe not like Walmart per se, but it's not bad. It's not bad at all. I don't think Target. I don't see a world where Target's not around in 10 years. That's always the very first question I ask myself if when I enter into a put with the company. Is there a world where I see this company not existing? And some people are like, well, how do you have Riot and Marathon? I don't think Bitcoin's going anywhere. So I placed my bets accordingly. I feel like Bitcoin is more stable than just printing a bunch of papers and calling them dollars and giving them a value. Like it's so arbitrary when you actually look at how money is made and the value that we place in it. I like something that has a finite number to it, but that's just my own personal deal. So definitely look at that one. That's a good trade. I appreciate it. I'm sure the community likes it as well. What about you, Mr. Premium? If you want to unmute and give us your trade idea, you gave us AI. Could have jumped on that one. I should have done both of those trades. I did the coin, but I should have done the AI as well. Could have made $1,000 last week.
Yeah. You know what? To be honest, I'm gonna go ahead and stick with that. The premiums there are just amazing. Looking at the 43, you're gonna get anywhere from about 360, 370.
So
I'd put in a stinker, to be honest. Go for about 375.
I like to pull it up. That way the audience knows what you're talking about. So AI, what expiration date, Ralph?
I thought you were talking 30 June. Everybody was looking at 30 June. Is that not right or no?
Yeah. Whichever trade, it's your trade. So whatever you think. And what you're thinking about the 43?
Yep.
Because last week it was like 36 and a half, wasn't it?
Yep.
Oh man, that's a huge run up, bro. And this thing's just gonna keep running, huh?
I think so.
Wow. Let's look at the. Let's see. Can we pull up the chart real quickly and just see how much this thing's run? Yeah, 62% in a month. What's the market cap on this guy?
Whoa.
4.87 billion.
Almost 5 billion.
How much revenue? I don't know anything about him. I mean, I know y'all talked about it AI last week, but how much money does this company make? I mean, like SoFi's like about $2 billion a year. How much money does this company make? Palantir is like between I think $2 and $3 billion a year. They don't have any debt. What does this company's balance sheet look like for like in comparison to Palantir? That's also in the AI space.
Yeah, I haven't done enough research on that.
So these are strictly premium cash grabs for you that have been working well.
Right. Yeah. I mean, this is definitely by no means I'm gonna YOLO my entire portfolio. I'm talking about one cool trade for this show.
I hear you, brother, and that's what we're looking for.
Yeah. I don't want to confuse all the viewers that Mr. Premium is a YOLO dude and trying to blow up his entire portfolio in 1 week. Just to be clear, 2/3 of my entire portfolio is boring dividend stuff, folks. They don't even really, folks, they're not exciting at all to be talking about on this show. So yeah, I'm just having fun here. If I was to do this, it would be one contract, maybe two, and that be that. If I was to do this.
So Scratch D is saying, I just had a conversation on a Zoom last night. We recorded it, but the gentleman doesn't want to share it because he has some security concerns with his job, and I have to respect that. But it was the same situation with SoFi. He has a lot of shares, twice as many as this gentleman here, or I'm assuming gentleman, it says Scratch D. I got over 20,000 shares of SoFi. I would like to get started, but know absolutely nothing about options, but need to learn. Any suggestions? I would like for all of us to give him some suggestions. Me personally, I would watch a lot of videos on selling cash secured puts and covered calls, specifically not wheeling, not rolling, anything of the sort. And once you get very, very comfortable with the idea of a cash secured put and a covered call, then you need to introduce a silver bullet into the equation, and that's rolling. You've already done the hardest thing, though. You're so set up for wheeling, you have no idea. You've already done the hardest thing. You picked the stock that you want to be long on. That's like, to me, the hardest part about wheeling is picking the stock. You've already made that decision. Mm-hmm. So now you got to look at, how can I take these houses? Because that's 200 contracts right there. How much money can that fetch me on a monthly, on a quarterly, and an annual basis? And is the juice worth the squeeze? Because that's ultimately the question that you have to ask yourself. So I definitely would tune into the channel. I would watch a lot of videos of cash secured puts and covered call. I've got, about 700 of them personally. I'm going to do some shout outs on YouTubers, wheelers that I have watched personally that I like their information. There's that gentleman, Marcus, the older gentleman. I don't know his last name. I feel like somebody put it on here on the chat. Marcus with an H. If you guys can help me find that and put it on there. I think it's Hostitter or something to that effect. I would definitely watch his channel. I think he does a really, here we go. He does a really good job of explaining the wheel strategy. I like the way Brad Finn explains the wheel strategy. I believe he's a teacher, and it shows in the methodology that he utilizes to trade the wheel. I would look at Tasty Trades. They have done a lot of videos on cash secured puts and covered calls. They're really big proponents of selling 30 to 45 days out and managing your trade 21 days to expiration. I would look at a gentleman named Adam. I want to say his channel is called In the Money. He does a phenomenal job of explaining the wheel strategy. And there's also a gentleman named Matt. He's an Italian guy. His last name starts with a G. He lives in Denver. The name of his channel escapes me, but this guy has a video on the wheel strategy. And then there's another one called Project Finance. Very beginner friendly channel. Covers the Greeks, covers cash secured puts, covered calls. I don't know if he specifically does the wheel strategy, but this guy, these channels, they have like 500,000 views when it comes to their videos, and they're very well done. Like, I just show my screen and I start talking. I don't have all the foo-foo, right? Like, I'm just showing you how I make money. If you want a good production, I don't know that we're going to offer you a good production, but I can give you good content and show you how to make money with the wheel strategy. But I'm not an RTF specialist, right? Radio, television, and film. That's not my goal in life. My goal is to make millions and millions of dollars in the stock market. But hopefully those things point you in the right direction. Brad Finn, Tasty Trade, the Marcus gentleman, then Adam within the money, Matt, the Italian guy, and Project Finance. So those are the things that I would look at if you wanted to get comfortable with cash secured puts and covered calls. Another thing that I want to introduce is, because we're about wrapping this up, I'm going to do the trade. I think I'm going to have to roll with mine, guys. I think because I have to shore up my charge point play. So I think that I'm going to go ahead and roll with some charge point. But I'm not going to touch that Riot cash secured put. It's printing, and I'm going to let it continue to print money. I want to bring on someone that doesn't know how to wheel onto the next podcast and wants to learn how to wheel. And then they can be sitting here with the panel, and then we can essentially educate them. And by default, we're going to be educating everybody that tunes in to that podcast as well. So if you guys can help find me that person for Wheelers number 3, and God willing, we can do that one next Monday. We came at you Tuesday because it has to be during the market hours because I got to execute the trade. So anyway, this is what I'm going to do, guys, with the trade. I'm going to go ahead and roll with charge point, because it's gotten its butt kicked and I'm still long charge point. So I want to go ahead and lock in some more puts, but I'm going to keep it simple on the channel. I'm going to match up. You see, I have the 850 I have 10 at 850 to just keep it real simple. I'm just going to go ahead and stick with that one, knowing that I'm going to ultimately roll out to 8, and I want to try to scoop up charge point at 8. Or if eventually the market starts shooting up, then I'll gladly scoop them up at 850. But that way I don't have to do another entry into the tracker. This one will be a lot easier. So I'm going to go ahead and stick with 850 to be really aggressive with it. And we're just going to go ahead and try to get it filled. You're agreeing to buy 1,000 shares charge point at 850 on or before June the 30th. If you aren't asked to buy charge point by then, you will keep your collateral on the full $600 in credit. And if you guys want to let me know what percentage is that, like how much money did we get for that? It looks like it already got filled, guys. So then now I'm going to walk y'all through the wheel tracker, show this tab instead. And for those of y'all that are new to the wheel tracker, I'm going to show y'all how to input the trade. So today is 6/20. And you just scroll down tab. You're going to go sell put. The expiration date is 6/30. The strike price is 850. So we wrote one that's in the money. I don't normally do that. I was just being lazy and I didn't want to do another one, a different strike price. It's more to monitor. And on the first batch, we got paid 34 cents. You guys can see that. And on the second batch, we got paid 60 cents or $600. I'm going to click that to open, and you guys are going to see that my open put contracts went from 10 to 20. So that, and then now we look at our adjusted cost basis. It's going to go down, hopefully, eventually again. So that is what we're going to do for the week. We're going to go ahead and call it good there. Let me go here. There we go. Closing remarks, guys. I hope that you guys are getting value out of this. Teach a man to fish and he'll feed a village. Absolutely. Is there a way to get an empty copy of the spreadsheet? Absolutely. You can reach out at tjthewheeldeal@gmail.com. My wife's going to be helping me out with those because I get inundated, guys. I get inundated with emails and even text messages now. Like I got a text message from a number today and we didn't even know who the number was. And she was like, who is it? I'm like, I don't know. And I'm like, so now I have to go through all the damn emails trying to piece together the puzzle and stuff like that. So Kristen's going to be helping me with copying and pasting the empty wheel tractor. But tjthewheeldeal@gmail.com. That is where you get the wheel tracker. And then you can watch the video that Troy and I did, and he shows you how to set it all up. Anyway, Option, you want to go ahead and go on with closing remarks, and we can wrap this one up, guys.
Oh man, the only thing we could pretty much do is like what I enjoy doing is just keep it simple, man. Just keep it simple and stay keen to your risk, understand your risk, understand the risk that you're taking, and let your positions play out, making sure you understand the markets that we in. We know that the market go up, down, and sideways. Understand the conditions that you're in, and then you just be patient and wait for your opportunities.
Facts, man. Very, very well said. So options word of wisdom for the day is keep it simple. What about you? What about you, Vic? What would be your words of wisdom for the week?
Always keep it simple. Always take action. Use your simple charting to keep track of RSI, what's overbought, and just look at your portfolio with your calls and puts and look how you can make more money rolling. There's a lot of nuances to rolling that I'm still enjoying figuring out. Don't be afraid to make mistakes. Don't be afraid to lose a stock.
Absolutely. What about you, Jose? What are your words of wisdom for the week?
Well, first of all, thank you for having me. And I would say just like at first I didn't like doing options, but eventually, like after you start learning like the to like roll out the options, um that's when everything like changed for me. So I would say like first learn the wheel and then learn how to roll options.
So Chewy is saying learn the wheel and learn to roll.
Hmm.
So I don't know if anybody else has noticed, but Chewy sounds almost exactly like Alex, meaning wheel deal. Yes or no? Alex,
Yes.
you're gonna watch
Yes.
this later. This guy is your doppelganger on the voice side. What about you, Mr. Premium of the Option, my guy, Ralph? What are your words of wisdom for the week for wheelers and encourage people to come back and keep learning next week?
Yeah, I would say you are the CEO of your own portfolio. What works for you may not work for others. You got to do what's best for you. You make the choices that work for your portfolio. There's other folks that like I think you mentioned it earlier. Is one trade works for somebody, it may not work for somebody else.
Right.
And then the I like to say is seller of options is the casino, and the buyer of the options is the gambler. Keep that in mind. And this is a long game. It's a grind game. It's not a get rich quick type of scheme.
Hey, Lamont,
Mhm.
options are real. Is that you?
Yeah, that's me.
Okay. Because we like to pay our debts on this channel.
Yeah,
So you should have that 10 on your Cash App, my guy.
I'm gonna go ahead and buy me some Bitcoin with that.
There you go. So my words of wisdom would be stick to your strategy. TJ the Wheel Deal strategy is never going to be your strategy. I think you guys have all said it well. Keep it simple. Take action. Learn the wheel, learn to roll, and you are the CEO of your portfolio. You need to position yourself to control the outcome so that you can manufacture the win. But before you learn how to manufacture the win, my word of advice would be define what the win is to you, because that is so different for everybody. It's such an individual, personal thing. For me, it's owning a bunch of stocks with other people's money. And eventually, I just want to ride off into the sunset, sell maybe one covered call a year, very, very low stress. And I'm just working as little as I can, making the most I'm willing to make for the time that I'm willing to invest into doing it and perfecting my craft. We got one more question here before we get going. Vic, how many days to expiration were your Apple calls that got called away?
Let me think. 3 weeks. It happened 2 Mondays ago, and I was planning on rolling them out instead of leaving a 3 week buffer. I was going to push it out to a 4 or 5 week buffer to not get called away. But someone beat me to it.
How deep in the money were you?
They were 155 calls.
Oh, shit. What's Apple at now? Like 175, 180?
Yeah. I was way above my cost. I didn't want to lose those, but like I said, I don't worry about losing stocks anymore.
Yeah,
But,
absolutely.
I'll get them back if I want them. I'll get them back.
Right. And was there a next dividend date or anything of the sort? Because
No,
I don't keep up with my.
I missed that.
Gotcha. Very cool, man. Well, hey, I appreciate each and every one of you guys. Hopefully we can keep bringing on one or two brand new guests for the week. Please reach out at tjthewheeldeal@gmail.com. Any suggestions that you guys might have on anything, my portfolios, anything on your portfolios that maybe I can help you out with, anything that you guys can think that we can do to make this podcast better, not just from an entertainment value standpoint, but we need to give you guys meat and potatoes on this channel. We want to legit show you how to trade all aspects of the wheel successfully. But anyway, guys, that's all that we have for you guys today. Thanks for tuning in. We'll see you guys next week at 10 a.m. Central Time, Texas time on Monday. But anyway, this is TJ the Wheel Deal signing off as always. May your sky stay blue and your stocks green. Peace out. God bless you guys.
Peace.
Yeah.